Toni Hansen. So, Toni, hello, how are you?
Hey, Lindsay, I'm good. How are you?
I'm doing well. What are you going to cover off on today?
Okay, well, usually in this segment, I like to do a little bit of an educational piece. In the mornings at 10:30 on Tuesdays and Thursdays, I do a lot of live calls with Kevin Dixon, starting out on the opening bell. And then we like to follow up, this afternoon on Tuesdays, kind of to help all of the viewers learn a little bit more about how they can take the calls that they're seeing here on Tradingviews and actually learn some of the technical reasons behind them and why they caught our eye in the first place. So in this segment, instead of going into very specific strategies, I wanted to show you actually some of the things that we were looking at this morning and what the reasons were behind them. Because, you saw me draw some templates this morning with Kevin, and then as the morning progressed, you saw how those templates actually played out, even though we hadn't seen them fully develop at the time we were talking this morning. So I wanted to show you a little bit now that they've actually followed through, what it was a little bit more clearly that we were looking at.
Perfect.
So I'm going to pull up some charts here, Lindsay, and share with you guys some of the setups that we were looking at this morning.
All right, thank you.
Okay, so hold on here just a second, guys, and I'll switch over to my charts here. And the first thing we were looking at, actually, I'm going to show you the NQ. And originally, the first thing that we talked about, it was the overall market bias heading into this morning. And we were going on the air at 10:45, or right around 10 o'clock, 10:45. And we were looking at this as a reversal strategy this morning, looking for strength going into midday today. And I even spoke of, we were looking at this NQ, and this had broken down very sharply, and then we'd seen a slower momentum move to the downside on this 5-minute time frame. And this was still a fairly steep push to new lows today, but it wasn't quite as gradual as you would like to see for a really rapid recovery. So the template I actually drew suggested that we would see those 3 lows, and we were going into that third low at that 10:45, which here's the first low, second low, and then that third low. And then we were looking at seeing some sort of a recovery, a bounce, with a strong potential for a slightly lower low, and then the recovery. And this is what you can see we ended up seeing actually play out. And this is just showing you how momentum shifts in the market can really affect the follow-through. You want to see a slowdown in the selling before you will see a more rapid recovery. This is a 10-period moving average here in this pink, and what you can see is that it started to hug that moving average before we saw that rapid breakout. And because I was looking at these reversals going into this morning, I wanted to find some stocks that were really holding up compared to the overall market. So I went and scanned through a number of the top gainers and top performers this morning, and a list of 3 that I came across for BHP, SCCO, and BBL. Now, as we were looking at this morning, here's that 10:45 level when we were on the air this morning, and these had gapped up strongly into the session. This is a 5-minute time frame, and they pulled sharply higher into this 200-period moving average on this 5-minute time frame. And this is an EMA exponential moving average. And what we wanted to see was a shift in momentum within the range itself to give us a breakout from that trading range. So I've drawn lines connecting the lows and connecting the highs to this channel, and shown how we wanted to see a more rapid rally off of that lows and then some sort of congestion before it broke higher. And what you'll see here is that it followed through exactly with those templates we were looking at this morning. You can see that there was a slower pullback into the lower end of the channel, and then a more rapid rally off of that lower end of the channel. And then notice how it really hugged that upper zone of the trading channel. Let me draw kind of an example over here of the template that we were looking at. So we were looking at it, coming back into the lows, And then what we wanted to see was there was around 10:45 here. We wanted to see a more rapid rally and then something slower to show that change in momentum. And actually trading these strategies, a lot of people, what they will do is when they're looking at a breakout, they'll go in and place their stop under the lows of that entire trading range or that entire congestion. And the thing is, you don't really have to do this. If there's a slowdown or change in momentum within that range itself, you can actually use that slower congestion and place your stop under the low of that more, a smaller time frame congestion within that larger congestion. And a lot of times this can allow you to take, sometimes it's twice as many shares, 3 times as many shares, but your risk amount is the same. So let's say you're just getting started and you only want to risk $100 on a trade. Well, going into this, if we had placed a stop under that initial low, that low would have been down here. And I'm sorry about, all the lines, but to go and erase them all would take some time, so I'm not going to do that. But a stop under the entire channel would be under this low here. Whereas because it had that smaller channel, you can actually go ahead and raise your stop level to under this intermediate, smaller time frame congestion and really give you a tighter stop where you don't really have much of a larger risk of stopping out than if you'd placed it under that entire low. In fact, you would actually have a better chance of maintaining a lot of your gains, because if it had broken through this smaller congestion here and even went lower, chances are it probably would have gone for a third low and broken through that previous low in the first place. So you would have gotten stopped out on that larger time frame stop, even getting stopped out on the smaller time frame stop. So I hope that makes sense.
It absolutely does.
Excellent. And I'm just going to show you the other two here really quickly, just so you can see that it was the same type of strategy that we were looking at. This was SCCO, and this is a copper stock here. And here was that rally this morning, and then we were looking at this congestion. Here's that 10:45 level where I was talking to Kevin at. And again, the sharper rally off of the lower end of that triangle there, and then the more gradual pullback here. And then a lot of people, they would have used a stop under this low here around the 10:45 level. Some of them, if this had been more of a trading range instead of a triangle, would have used under that low around 10 o'clock. But really, you can narrow it up, use that low here around 11:15 as your stop zone. And in taking these as an entry strategy, a lot of people will use that channel break from that overall triangle, the highs here. This is even not the most ideal entry. Usually I will take that smaller channel once again, dropping down there, and use that as my entry trigger. So I'm getting in ahead of all of these people that are rushing to take above previous highs. So that wasn't the best line, but they'll take above previous highs or they'll take above that channel break. And by that point, you're basically tripping over each other to get into that. The volume has often already picked up. It's already confirming, and you're jumping and jumping off of that ask to try to trip over each other to get into this position. Whereas if you drop down, take those smaller breaks, you've tightened up your entry, you've tightened up your stop, you have not increased your risk. In fact, you've got a much better strategy than most of the other people that are taking traditional technical signals on these breakouts. So just one of the ways where I will go ahead and play these breakouts, as opposed to what you'll see in a lot of the typical technical analysis handbooks or guides, that sort of thing. BPL, same type of thing. This was another one. This is a little bit closer to that BHP we saw, more of that channel break. But once again, you would have had a stop that was about half of what you would have had if you'd placed it under that 10:45 low there. So really great examples of where you can tighten up your entries, you can tighten up your stops, but you're not increasing your risk. You still have a very, very strong strategy. And you can learn more about these on my website at tonihansen.com. And of course, I'll be at the LA Traders Expo like I talked about with Kevin this morning on Friday, and I have a workshop there at 8 o'clock. So for those of you that are out there or want to catch the webcast, that's a great opportunity for some additional education.
Perfect. Fantastic. Thanks for joining us today, Toni. We appreciate it.
Thank you. Glad to be here, Lindsay.
All right. Have a good day.